Hi, thank you for joining me today. It is October 22nd and it's 7 p.m. Eastern, just in case you were in another part of the world. We're going to get into this trade right away because the market is open and there's things that need to be seen. So we're going to start our screen share and we're going to get that up and going. And this is what we're doing. We are actually working with NZDUSD, which is New Zealand dollar, United States dollar. And this specific trade has been going since June 25th. So it's been a while. That's the type of trader I am. I take the long-term trading and then I'll stick in it until it actually does what I want it to do. But I'll show you how I'm doing it. As you can see, there's no indicators on here. This is what is called a naked chart. Without the indicators, all you'll see is the entry price, the stop loss, and the take profit. Now the entry price is a buy. Got little bugs flying on me. And it's a 0.01 lot size, which is the lowest lot size. The lower you have, the least amount that you have, the longer you go, the less risk you have. So it's a 0.01, and the entry price is 0.68310, which is right here. My stop loss is at 0.61310, which, going into the 4-hour time chart, you will see that it's actually at 7,000 pips, or $70. The reason it's only $70 is because the lot size is 0.01, keeping the amount that can be lost at a bare minimum. My take profit is at 0.75310, or also 7,000 pips to $70. Now the reason I have my stop loss and my take profit at the same amount is a 1-to-1 ratio, meaning the risk to profit ratio is the same, making the drawbacks or the pullbacks or whatever you want to name less of a risk. And it keeps your margin level over 4,400%. Now, most brokers will tell you that you can go as low as 100%. I wouldn't do that though, because I'll close your account. The more you lose, the more apt the broker is going to shut you down, and you'll do not just a stomp out, but your whole account will be gone. You don't want to do that. So keep your risk, keep your lot size as 0.01 if you trade as long as I do, for months at a time. And the reason I trade this way without the indicators is because there are no indicators. The only way I can see what the trade's going to do, the trend the trade's going to do, is to go in the higher time charts. Now, many people have asked me, okay, I see on your chart that there are many places you could put in a sell or a buy. Why do you only have one? Well, the answer to that is this broker. This broker has a FIFO rule that they follow to a T, which is first in, first out, if you didn't know what those were. So the first place I put in, whether it's a buy or a sell, it doesn't matter. It has to be pulled out in profit or stop loss before a second one can be pulled out, meaning first in, first out. So putting in 2 or 3 positions, price entries, actually destroys your margin level, making it possible for you to lose everything for a second price. Is there a reason for that? Not much. Now, many people have asked me, okay, I understand why there's no more than one. Why don't you trade on the smaller time charts? Let me show you. Going down in the minute time chart, we're going to liken this to, say, a new movie that's out in the theaters now that lasts a good 2.5, 3 hours, right? The first minute, how much of that movie are you getting? It got your interest because you're sitting there. But that's about all you know. You don't know the characters, you don't know the theme, you don't know the background, you don't know any of it, except for the first initial music that you might hear. That's what I look at a minute time chart. There's not a lot here. There's some information, very little, but it's got my interest. It got my idea on where I want to look. The looking at a chart without indicators, are you going to be able to tell me what the stop loss or take profit should be? More likely not, because you don't see the trend that the trade is actually running. Moving into the 5-minute time chart, you got a little more of that movie, but still not enough of a picture to understand the full story. You don't know what's going on. You only have the first 5 minutes. That's the same with the time chart. 5 minutes, you see some movement, but you still don't have a clear picture, and this time chart only goes back to about a week. There's not a lot of information on a week time period. See where I'm going? Going into the 15-minute time chart, yes, I have a little more information, and there are some head and shoulders and some drawbacks. Now, before I go further, people want to know why I don't have the indicators. Those indicators can be very difficult to learn when every night I go through grand mal seizures, losing my memory. So I have to relearn everything, and relearning the indicators throughout the day is kind of mind-boggling. So I keep it as simple as possible to help anyone that could be having the same situation. However, after saying that, I know what those indicators are. I just don't mark them on my chart. I do it without the indicators. Now back into the 15-minute time chart. Yeah, there's stuff here. But how far in that movie have you gotten? Do you have a clear picture yet? Probably not. You just barely got the beginning of the theme of the movie. You know the characters, but do you know where they're going? Same thing with this time chart. A 15-minute time chart won't give you as much information that is necessary when you're a long-term trader. Going into the 30-minute time chart, I can see some things. And yeah, it's changing. I have a little bit of an understanding, and it goes back to September last month. Still not enough education, not enough trend line, not enough of anything to know what's happening. However, if you are a type of trader that has been trading for a while, has the skill, has the education, 30-minute or less will definitely work for you. And if it's in your comfort zone, by all means do it. But don't trade your rent or mortgage. Put a specific amount in a trade account only, because once you lose it, it's not going to reflect on you very much, because it's not something that you need, right? Now, I move into the hour time chart, and most movies in an hour, you've seen half of it, so you definitely know what's going on. But there's always a twist that changes things, and that's what a trade will do. You'll think you know where it's going, and then it will do what's called a flip-flop or inverted head and shoulders. It will go past the support and resistance. and you won't have a clue what to do. So if you're a smaller time chart trader, by all means, do so. If you are a long time trader, then you might want to hold back a little bit. Going into the 4-hour time chart, now don't get me wrong, I was in this for quite some time, up to about 2 months ago. Then I realized I wasn't getting a very strong picture, wasn't getting the whole picture, the whole story, because it goes back to November of 2017, maybe a little under a year. Granted, there's quite a bit of information here. And in your movie, you've done very well. You're already done with the movie. So you should have a good amount of information. However, this is not my comfort zone. And I move into the daytime chart. And here is where I can see clear back to almost 5 years ago. And I can tell you and show you where the inverted head and shoulders are, where the other head and shoulders are, where it broke through the support and resistance and came back up and turned around. And there, the whole trade will repeat itself. That's why the higher time charts are so important, because they always repeat themselves. Every trade will show you what it's going to be doing. In the higher time charts, you don't have very many guesses or concerns of all of a sudden something else happens. So without the indicators, you want the higher time charts. Because when you trade right, but you look left. And that will tell you what to happen. Now, yesterday, when we finished, we were around negative $24. And as you can see, I'm at a negative 27.54, and I'm not worried. And here's why. When I trade, I start where the trade is currently at, and I go left. To the last time it was in this place was back in January of 2016. And if you follow the trend of this trade, you can see it's heading up. It is going and doing its head and shoulders. It's doing its 3 tests and retests and coming back up. And it will continue to do that. It's been doing it all along. So this is why I can say that this trade, yeah, it's a negative 27.50. However, before long, I would say in about a month or the end of this year, it's going to turn around and do what I want it to do, because I can see how this pattern, this trend is going. And trends are our friend, right? So we're going to stop our screen share, because I think there's a question I need to answer, and that would be, where do I get my signals? The signals I get are from 5 different places. One is Orrin Wright and Stevenson Lindor, who are educators in IML Academy, IML TV. To get access to them, you actually have to be part of IML. So you need to join and get going if you want that education. Another one is Christopher Terry, who is our CEO of IML, iMarkets Live. And he's been trading for over 25 years. So I think he's got the experience. What do you think? My 4th place is actually the sponsor that brought me into iMarkets Live, who is named Tracy Walker. And she goes and does her own specific trading to train people how to mark up their charts, to set it up, to know what's going on, and to get the best possible results. And the last place is Swipe Trades, yeah, which is an app that goes on our smartphones through iMarkets Live. So if you want to become a part of it, reach out to me and we'll get you the information so you can. In the meantime, you go and have a great day, and I'll see you tomorrow. Bye for now.